Good morning, traders. Manny Cabrera, co founder of MDC Trading Academy, with today's pre market forecast for Monday, July 15th. Yes, folks, halfway through the month already. Unbelievable. Let's go to our news items for this week. Pretty light week in reference to news. Only things to highlight, of course, is tomorrow, 8:30. We have retail sales. And we also have Chairman Powell of the Federal Reserve speaking tomorrow at 1 p.m. That's way before we get done with our trading. But sometimes the market sits around with some sort of catalyst, just waiting around for a catalyst, and sometimes to wait for that. 8:30 we have building permits, and after that it's just some of the members of our, except for Philly Manufacturing 8:30 on Thursday, and the rest is just some of the members of the Federal Reserve Bank speaking. Oh, and I forgot this one here at 10 a.m. on Friday. We had a prelim UOM. So it's a pretty light report week in reference to reports that are going to be impacting the time that we trade. So let's look right into our daily chart here. Market is absolutely unbelievable and undeterred. Market continues to make all-time highs. I mean, I was looking this morning before I started. Look at these all-time highs. I have every one of them marked up. And this morning I wake up and in pre-market we're at 30.2350. Who would have thunk it, huh? 30.2350 as an all-time high in the pre-market. That means that once we broke 3,000, we're almost 20 points, almost 20 points. I think a tick short of 20 points since we broke 3,000 and we made over 3,000. That to me is astonishing. Interesting thing is volume continues to be very low. So we're attaining these all-time highs on very low volume. That doesn't always bode well, okay? Because normally we want moves in either direction to be accompanied by some volume. But this is historical. This is the way it works. We go up the stairs and down the escalator. But that's just part of trading, particularly in the summer. So that's the two dichotomies we have. We have summer volume, summer movement, but yet we continue to relentlessly and incredibly to make all-time highs. I don't see any reason why we cannot continue. Technically, it looks like everything's up. We've had the last 1, 2, 3, 4, 5 sessions. We've had all up sessions except for one small doji here to the upside, but that broke up. So maybe a little bit of retracement, maybe a little of both. It's hard to predict these kinds of movements simply because, again, we're not being followed with a lot of volume, and we're also trying to establish all-time highs continually. So they're kind of tough to trade because of that. So there's two things you got to look. So you got to be very, very selective. So speaking of selective, let's go to one of our projection charts here so that we can see how the market continues. Although, like I said, once again, very slow volume, very low volume, and very low volatility, all of our projection areas are continually hitting. So you see, technical analysis, this is a lesson, I guess, the lesson for this morning. Technical analysis doesn't work because we have volume or we don't have volume. Technical analysis works because patterns within charts continue to repeat themselves over and over and over again. Now, when you have a lot of volume, these patterns develop quickly. When you have low volume, they develop slowly. And that's the adaptation that we need to make as traders to realize where we find ourselves in this particular market and try to trade accordingly. That way, we don't have these false expectations of how the market should move, so on and so forth. If we're expecting a slow market, but yet it's a technical sound market to trade, then we should trade it without any type of variation or any type of hesitation. So here we're coming off the all-time highs. Very similar patterns. We've had all the same pattern over and over and over again. Establish an all-time high during the pre-market, during the regular session. Then we break through in the pre-market. Here we had the same thing on Friday. Here was our all-time high that we had established on Friday, and then we open up in the on Thursday session, open up in the pre-market, and boom, what do we have? Our higher high. This is Friday session. There's our all-time high, new all-time high. Pre-market, we break it. So it's basically the same pattern, and look what happened on Friday. On Friday. On Thursday, same thing. All-time high. We ended up to the low side, broke straight up. What happened here? We came down to the low side, ended up. So this time it did the run to the downside a little earlier. Here it did it a little earlier. Then it attempted to go high, and then it went lower, but eventually continued to the upside. So that's what we're looking at right now. That's why the movement seems a little bit to hesitate, but it's still very, very, very insatiably desirous to go up. So what are we going to do? We just got to play it as we see it. So what do we got here? Market in between two areas. Yesterday's Friday's intraday high, intraday low. See how the market retraces from this area, develops a good support area, breaks cleanly through with a lot of strength, is using now all the intraday high as support, breaks through a couple of times, but here is attempting once again to come a little higher. So what are we looking at today? We're looking at two potential things. Here is what we call our north-south line here. This is the line that we're expecting the market to continue to respect as long as it continues to try to move higher. That's the line right there. Now, we do have a micro one here, which we can use for short-term, for real quick gains here. We got to be very careful because the closer we get to this area here, to the intraday high, the more it can pull down, and you can potentially end up trying to take a trade from here, and the market just drops quickly here before it moves higher. So be careful with that. Now, if it doesn't do that, the best place to take a trade like that would be a little higher, maybe somewhere right around here. That would make a little bit more sense. Otherwise, we're looking for this either to hold for the continuation, or this is a true area where all of the buyers are sitting. So let's look here at our trade chart, and I think you can see it even more clearly here. Here are two trend lines. Our two trend lines, and this is the one that I was telling you about. If this trade is going to work up here, we want it to be further away from this gravitational area here, because remember, these intraday highs and lows are strong gravitational areas. We want to have enough space so that the net effect will not affect us that much. If the market breaks through this area, we're expecting this area to hold. If not, this is the one area that we're expecting the market to hold as far as upward movement is concerned. Now, the good thing about it is that we do have trades from this area to this area. There are short-term trades to the downside, but they're very short-term trades, in, out, very aggressive on your risk management, simply because we're to the upside. All right, let me know if you have any questions. Have a great trading session.